Hi guys. So after 5 straight down days on the S&P, yesterday we got a very strong bounce back. We bounced right off the 200-day moving average, and the long-term trend so far is we are still in a bull market. The long-term trend is up. Having said that, we are not out of the woods yet, and today is Wednesday. We have an FOMC meeting today. And for those who are new or don't know, FOMC is the Federal Reserve Open Market Committee meeting, I believe. And this is where Janet Yellen, the Federal Reserve chairperson, I suppose. This is where she comes out with meeting notes and guidance on where the Fed is going in terms of interest rates. It's always an important day for the market. It happens, I think, once every couple of months. And it is also a very volatile day on the market. So even though we had this big candlestick up yesterday, bounced right off this red 200-day moving average, today we're going to have to still wait and see where we are. Right now in the market, we're basically in no man's land. As you could see, we're we're right actually in between this blue line and this red line. So the market could still fail and still go down below the red line, or it could kind of just muddy around in here for a while, or it could obviously go back up. So we'll have to wait and see what happens. I didn't do any trading yesterday. As I said, on Monday, I sold about a quarter of my positions. I left those sold for now. But I think what I'm going to do is if the S&P can get back above, at near or above this blue line by the end of the trading day today, which is the 50-day moving average, is this blue line. If we can basically close at or above 2100 on the S&P, then I think I'm going to buy back about half the positions I sold. And then tomorrow, if the market can confirm and stay above this blue line, then I'll buy back the rest of my positions. And then that will take us into Friday. That said, like I said, FOMC meeting days like today tend to be extremely volatile. You have to wait and see what happens, and you have to especially watch what happens in the last 2 hours of trading. The last 2 hours of trading, 2 o'clock is right when the meeting notes come out. That's when all the news breaks, and then the market tends to kind of whipsaw back and forth, up and down, and you never quite know what's going to happen. Just watch the last 2 hours. Don't do any trading until like the last 5 minutes, and then at that point you'll have a better sense of where the market is. Also, as I mentioned before, this is a heavy earnings week, and earnings week tends to be very volatile, as you could see. From these big moves on the candlestick, you could see how volatile it is. So yesterday I suggested that there are three possibilities over the intermediate term for where this market is going. One thing the market could do is shoot straight up from here, parabolic move up, make brand new highs, and then fail, and then quickly go back down. To me, that's like the nightmare scenario, because that'll just take everybody by surprise. It could happen. The other possibility is that we just fail from here and we go below this red line, and then that is it's a easier way to confirm that we're in a downtrend. Or the third possibility, and which I think is the most likely possibility, is that we do the same thing we've been doing all year, which is we basically just grind higher. To the frustration of bulls and bears alike, the market kind of heads sideways. It basically heads towards new highs, but it doesn't do it in a way that gives anyone really a clear opening to trade. Um, day traders would probably not like that scenario, but I think that's where we head. I think that that's what this long-term trend is showing us. Um, but again, we have to wait and see. I don't like to guess in advance what the market is going to do and kind of quote unquote try to be a hero. I like to wait and see what the market does, confirm what the market does, and then trade. I just think that's better for the long term. Here is a longer term chart, this is a 1-year chart of the S&P, and you can see, like I said here, we bounced right off this 200-day. A couple weeks ago, we broke below it for a very short period of time, and then we bounced right back up. Here, we didn't even breach it yet. We just bounced off it and we bounced right back up. So today we'll have to see if it confirms. Here's the same chart on a weekly basis. This is the same 1-year chart of the S&P, except for the candles show what happens over the week as opposed to each day. And here again, you could see this blue line bounce right off of it. The blue line here, by the way, is the same as the red line over here. So we're in a bull market. The long-term trend is up. It's been up for a while. I'm still leaning with a long bias. This market is innocent until proven guilty. So let's wait and see what happens today. All right, guys, I will talk to you tomorrow.